traders, I'm here to share with you about my stock account. Today, my stock account has closed up to $70,388.19 US. United Natural Gas closed up and SQQ also closed up with a gain as the market generally closed lower today. Dow Jones Industrial Average closed down 1.08%, Nasdaq Composite closed down 1.87%, and S&P 500 closed down 1.35%. Today, the software industry generally closed with a loss of more than 2%. As the Jackson Hole annual meeting began, Powell did not speak, and Wall Street has risen, pricing hawkish expectations. Ahead of the Jackson Hole Global Central Bank annual meeting, an abstract interest indicator dominated the discussion of global trading platforms. That is, investors wondering whether Federal Reserve Chairman Jerome Powell would step into the neutral rate expectations, and if he did, U.S. Treasury yields would rise further and global equity market valuations would come under pressure again. Fidelity International, Jupiter Asset Management, and hedge fund Blue Edge advisors are all pondering the negative impact of the expected increase in the neutral rate, also known as R. This is the theoretical level of interest rate at which interest rate neither stimulates nor limits the economy. If the Fed wants to curb the price spike, as it is doing now, it'll raise and maintain its benchmark industry above the neutral level. While economists define R as inflation-adjusted indicator, it is also broadly short for central bank nominal policy setting. On Thursday, some investors gathered that NVIDIA chose to take profits after reporting strong results, then shifted its attention from NVIDIA's blow-up results to Fed Chairman Jerome Powell's upcoming speech at the Jackson Hole Global Central Bank Symposium. Powell's speech could change market expectations about the direction of Fed policy. That is, his comments are likely to reset market expectations for Fed policy rate. The end of the Fed's rate hike cycle is now widely expected, but fears for higher for longer on the rise, with expectations of higher interest rates to come at least March. However, the current Wall Street census is that while Powell is likely to make an unexpected hawkish comments, as evidenced by 10-year Treasury yields, known as an anchor of global asset pricing, and short-term U.S. Treasury yield, as well as the Thursday's sharp decline in three major indexes of U.S. stocks. The 10-year Treasury yield remains at its highest level since November 2007. Largely suggesting that the market rate cut bets are gradually withdrawing, replacing by expectations that the Powell will remain higher interest rate for a longer time, and the more hawkish news is possible, including interest rate cycle is not end, and the neutral rate expectations may be reset. Max Wasserman, founder of Miramar Capital, said Thursday's market performance was a bit like sending news in advance. NVIDIA's after-hours earning numbers on Wednesday were very good, but the market has reflected this. That is, the stock price skyrocketed before the earnings report. Investors may realize that we have made huge profits, so it is likely to take profits before Powell's speech. Of course, if the Fed hasn't poured cold water on this time, they might have returned right way. If neutral rate expectations is raised, it also means that the global asset pricing is also rising. Therefore, any hint of upward correction is likely to spill over into global markets, forcing a reassessment of fair value of the 10-year Treasury yield, which is the anchor of global asset pricing, might fall. To complicate matters further, the level of interest rates that are best for the economy is not necessarily the best for the market, potentially disrupting the financial system. For most traders, R is like people's appendix, considered irrelevant to every day until it flares up and makes you painfully care, said Kevin Yu, manager of Merlion Fund from Blue Edge. Since 2019, Fed policymakers' median expectation for the long-term policy rate is 2.5%. It's essentially their neutral measure, down from 3.5% 8 years ago. He said pushing toward medium-level interest rates could exacerbate discussions about whether trend inflation is likely higher or whether investors should demand higher premiums to buy longer-term U.S. Treasury yields, keeping pushing up 10-year Treasury yields. Gross recently said that the U.S. 10 is overvalued by the market, and Gross expects the fair value of the 10-year U.S. Treasury yield to be about 4.5%, which indicates that the anchor of global asset pricing may have upside in the future. During Friday's Asian trading session, the 10-year Treasury yield is held at steady around 4.24%. And rose about 4.36% on Tuesday, extending its highest since November 2007. From a theoretical point of view, the 10-year yield U.S. Treasury yield is equivalent to the R indicator as a denominator end of the DCF valuation model, an important valuation model in the stock market, and analysts generally set the value based on the 10-year Treasury yield. And in the absence of significant change in other indicators, the higher the denominator level, the lower valuation of the stocks, especially risky technology stocks and other risky assets. Despite the market buzz, many Fed watchers believe Powell would shy away from the sensitive topic when he speaks on Friday. In March, he told lawmakers, "To be honest, we don't know where the neutral rate is." In 2018, his first Jackson Hole speech as Fed chairman, he highlighted the uncertainty inherent in estimating in these long-term variables. New York Fed President John Williams said in May that the pandemic hasn't had much impact on our market watchers have mixed views, with logic for raising neutral rate, including the recent resilience of the U.S. economy, raging budget deficits, potential savings decline, more spending on reducing carbon emissions, and the potential of technological advances such as artificial intelligence to boost productivity. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.